Good morning and welcome this morning. There's the opening bell. It is Trading Futures. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined by my good friend Michael Fairborn and all of you. Thanks for being here. Whether you're in the live version or the recorded version, I'm glad that you're here and a part of this conversation. A lot of stuff going on today as we come back from the long holiday weekend. Hopefully everybody had a great weekend. We're ready to get into September trading, although it doesn't seem that perhaps the market is ready to get into September trading. So we're going to talk about that today. We're going to talk about some moves that are already happening here this morning and have been happening overnight as we get rocking and rolling up here. Again, Michael Fairborn is going to be there to help answer your questions and be a part of the conversation. Do us a favor. If you are here in the live version, chat in a question and be part of the discussion. If you are in the recorded version, leave us a comment in the comment section, and we're going to respond to that as quickly as we can. Great opportunity for you to participate and be a part of the conversation. A couple of quick housekeeping items, though, as we get started here for our first webcast of September. Futures and futures options trading involves substantial risk. It's not suitable for all investors. Make sure that you are aware of and have read the risk disclosure statement for futures and options prior to trading any of those products, considering any of those option strategies. Remember that everything we talk about is simply for illustrative and educational purposes only, not a recommendation. Remember that not all traders will, or futures products are not suitable for all investors. It requires separate trading authorization. Not all clients will qualify. Also, as we get into this discussion, remember that when we talk about things like virtual currency derivatives, which we may and we have in the past, make sure that you understand that there are some specific risks associated with those. Make sure you read the NFA Investor Advisory and the CFTC Customer Advisory on those products. Recognize that those are a digital representation of value. It functions as a medium of exchange. It does not have legal tender status, at least not yet. It might be happening at some point in the future. Who knows? We'll see if that changes. But remember that those specific risks exist. Also, remember that we're going to be using the Thinkorswim desktop software platform today, specifically the paper money version of that platform. It does not do certain things that a live trading platform will do. One of those is it does not allow for the use of studies in searches and scans. Some of those other things are associated with trading options, which we're not going to get into in this discussion today. But be aware that there are some differences when you move from paper trading to live trading. It's a great learning environment, not a guarantee of future success out there in the real world. We're going to use technical analysis today, but that is only one way to look at the market. Schwab doesn't advise using technical analysis as the sole means of investment research. Also, remember the difference between stops on futures and stops on equities. Now, stops on equities that generate a market order may end up with a fill that is substantially different than the trigger price or the expected price. Stop orders on a futures contract due to exchange rules based on conditions at the time that the stop order gets activated will be substituted by an exchange designated limit order within a protection range. And if price moves outside of that protection range in the event of a fast moving market, there is the opportunity for that order to not fill. That is a challenge if you are expecting that it's going to stop you out and get you out of the trade and remove the risk. So be aware of that. We'll point that out as we get into this discussion. We'll talk about that in the context of these trades as we put them on and discuss them today. So let's jump over here to the Thinkorswim desktop software platform really quickly. Once again, thanks to all of you for being here. I put on a trade earlier this morning as an example. And again, remember, this is always an illustrative and educational example. I happen to notice that very early on, when I was first starting to look at the market, the crude oil market was moving pretty quickly. And it has been kind of a relatively calm futures market over the course of the last couple of sessions. If we take a look at the larger chart here, the 1-year daily chart, I'm going to maximize that chart. And we can see that over the course of the last few days, few trading sessions, there's been a little bit of upward movement. There's been this resistance area up here about that 65 mark. We've talked about this in the past. The idea that that 65 range up to about 67, 68 or so is kind of in that lifting cost area. So when price is below the cost that it takes to pull oil out of the ground, that tends to restrain supply because exploration and production companies tend not to want to lift oil out of the ground when it costs them more to lift it out of the ground than it does to sell the oil. Now, they have delivery contracts to be sure, so they're not going to stop production entirely, but they may stop new production, they may stop new exploration. And so when price tends to hover below those lifting cost levels, those resistance areas tend to establish themselves from the standpoint of perhaps bearish speculators on the futures market and in the oil market in general. But starting to see a little bit of a push to the upside in that CCI, that measurement of kind of trend pressure. This trend is gaining a little bit of strength, so moving a little bit higher. Now, I thought what was really interesting, and I'll look at this on the shorter term chart here in just a second, is that kind of saw a bounce down from that resistance level in the last trading session. So we'll see what that looks like. But I wanted to quickly review what this micro crude oil futures contract looks like from a specification standpoint. And that is the tick size. Again, tick size is going to be determining our significant digit. That significant digit in this particular case is this point right here, the last value in this price of the contract. 64.79. The 9 is our significant digit. That moves in 1 point tick values, which means that this is going to move in 1 point increments. And each point value, so each change in 6.4 to 6.5 or 6.4 to 6.3 represents a $100 move. And that then times the price gives us our notional value, 64.81. Notional value, essentially the amount of contract size, the amount of dollars that are being controlled by that particular contract. And that's where we get our leverage from. Now, a couple of people asking, how do we get that indicator? It is linked in the description of this particular webcast, but I'll show you what it looks like. It's a futures label script. Now, I'll tell you what, if you want to learn anything you want to know about ThinkScript, Michael Fairborn is your man. He's right there in the chat. He teaches on Friday afternoons the ThinkScript webcast, and I think it's Friday afternoons. Maybe it's Thursday now. I've taught it a couple of times, and I don't do nearly the job that Michael Fairborn does, but he talks about how you can create these scripts, how you can use these scripts. I'm going to click right here on that little scroll. Here's that script, and I'm going to share that with you just so that you've got it. I'm going to put it out here in the chat. Remember that anytime we share a script or a shared item or anything else, it is for illustrative and educational purposes only. It is not guaranteed as to time or accuracy. So there's that futures label right there. You've got that right there that you can put on your chart as a study, and then it'll show up on the top of the chart. But what I happen to see happening here over the course of this kind of evening trading session and then into this morning was this rally up to right around that 65 level of resistance, that previous resistance line that I had drawn. And it bled above that level and then started to make that move lower. So I was looking for, in fact, as I started to set this trade up, I was looking for this little bit of a bounce off of the previous support area, the support area that had kind of established itself right around that 64.90 mark. So looking for that support area, I was looking for a bullish bounce here. And I set the trade up looking for a close above the high of the low day. So I got the little bit of a low day here. I moved it down a little bit and set the trade up and kind of walked away from it because I was looking at other things. And the trade ended up filling right here. So my entry point in this particular case in putting this trade together was 64.95. It was a move above 64.95. So that was a buy stop on this /MCL contract. Buy stop, saying stop, wait, don't do anything until this order, until this price gets to that price or above. So the price that we were looking for at that point was 64.95. It moved above 64.95. Now, a buy stop that issues a market order is going to get worked as an exchange designated limit order, just like a sell stop. It works the same way. And it gets worked within a protection range. Well, the market didn't move that quickly, that it moved outside of that protection range, and we got filled. The target was up here, kind of where that previous resistance level was, right about the 65, I think it was 65, where were we? 65.70 was the target to the upside in this particular case. And the stop that I put here was 0.5% below my support level. I just went 0.5% below that support. Some traders may use a different amount. Some traders may use some kind of symmetrical measurement. In this particular case, I simply used 0.5%, being the level at which I was willing to take the trade off, or intending to take the trade off, because again, as that stop gets filled, because it's a stop market order, that would get worked as an exchange designated limit order, and there is the potential that that order would not get filled. I just want to be clear about that. We're now coming back below that. We're below at the moment our entry price into the trade, which was right around the 64.95 level on this move higher. But what I'm also noticing here in this particular case, and the reason that I haven't backed this trade off and taken it off, number one, it hasn't hit our stop expectation yet. So it's still working in this particular case. But the other thing that I'm noticing, if you are also noticing this as well, is that momentum has really not made. I mean, we're at a point where we're back down near roughly an equal low, and you can see where momentum was on that push to the downside. You can see where momentum is now. Momentum is significantly less to the downside. And this is a MACD histogram, so it's going to lag just a little bit. But in this particular case, we're now looking at each one of these candles being 5 minutes. So each one of these momentum bars is going to represent 5 minutes. Now, it's going to lag by a little bit. It's going to lag, in fact, by about 9 bars. So that's going to go back to this momentum. So we're still seeing this momentum right here that is dragging this higher and keeping this higher. So from that standpoint, we've got a little bit of bullish momentum building. It's not clicked over the neutral line or that zero line yet. So it hasn't really turned, but notice the shadows on the bottoms, or wicks on the bottoms of these candles. This is coming down. That's significantly different than the wicks or shadows on the bottom of these big red candles. This was coming down into that support level. So, I mean, it's coincidental. I will say this, to be 100% honest about this, I would love to claim that I knew something about where this level of support might be, and that's why I based my stop on that. But it was simply 0.5% below this support level that I had already drawn in. I didn't know that that was going to act as a support level. It makes sense, I think, from a standpoint of saying, you know, a certain percentage below that level, but it didn't do, I mean, I didn't plan that. It just happened to kind of fall right at that level and establish a little bit of a support. So I would love to claim that I did, but I didn't. So now we're starting to get a little bit of a green candle and some potential move to the upside. Again, no guarantee that this is going to make that move to the target up here at that top, at that previous resistance up around 65.70. But it's giving us some indications of that potential move to the upside. Nevertheless, we are long the contract, looking for this to move higher in this particular case. So I just wanted to kind of talk through this particular trade. And speaking of that, two things while we're here. Click on subscribe down at the bottom of the page, and that way you can stay connected to this Trader Talks webcast community. And number two, there's a feedback survey out there in the chat. I would love to hear, Michael and I would both love to hear your feedback on this webcast. Remember, if you love the webcast, it's a 10. If you hated the webcast, it's a 1. I mean, if that's kind of the spectrum, let us know. And, let us know some things. I mean, one of the reasons why we make these webcasts, we can make these webcasts better for you, is when you let us know what you'd like to see, what you're enjoying, those types of things. So fill out that feedback survey and help us out with that. All right, so that's the move initially here on /MCL, the crude oil contract. I want to do this really quickly. I want to go out to our futures grid because I noticed a number of you are saying, wait, hold on a second. The market's moving. And you're right, it is. So let's take a look here really quickly at the S&P 500. This is /ES. This is the E-mini S&P 500 index futures. And this is a one-year daily chart. And so I'm going to zoom in on this narrower time frame here, and it is approaching not only a horizontal support level, but it's also approaching the 50-period simple moving average. And that 50-period simple moving average is a key level. It's a key level for a lot of intermediate-term investors, not only in the futures market, but also in equities. And now, granted, the equity index, the SPX, is going to move a little bit differently than the /ES, because the futures is a separate instrument. The SPX is not a tradable instrument. It's simply the accounting of the cap-weighted prices of the components of the S&P 500. The ES is going to function, the /ES, is going to function with its own levels of support and resistance, its own supply and demand functions. So it's going to move differently than the SPX. But a couple of things that I'm noticing here, the RSI falling off below these levels that we've been at below before, kind of right back down to this low where it was moving towards the 50-period moving average. So once again, very close to that 50-period moving average. Now that becomes more critical when we shift our view over here to the NASDAQ. This is the /NQ. Again, this is going to trade similarly to the NDX. But yeah, it does. Carol says the situation seems to be improving at the moment. Starting to see that little bit of a bleed below the 200-period moving average. This was a little bit lower when I got started here this morning. Now starting to see that move back above, not quite yet above the 50-period moving average. So that bleed below may be concerning for some investors and may be triggering in the sense that they may have algorithmic stops at that 200 or that 50-period moving average from an intermediate standpoint. Across below and then a move back above may be a trigger for entry into long positions as confirmation of bullish trend. But we're starting to see that RSI bleed a little bit off, losing some momentum here. The Russell 2000 in the kind of the small cap space, which has been, to be fair, a lot stronger. And we talked a little bit about this on Friday in the Market Movers webcast, but starting to see perhaps this little bit of a trend setting itself up here, this diagonal trend above that 200 or that 50 period, above the 200 period moving average. So while it's a downward movement today of 1.2%, it's not approaching that 50 period moving average, number one. And number two, it is not seeing the same demise of the RSI momentum that the other indexes are seeing or the other futures contracts are seeing. So small caps staying a little bit stronger, maybe ahead of the Fed meeting and the potential rate cut here in September. So we can use, this is another one of the great uses of futures contracts and futures markets is as a means to see how the market is reacting to overnight news, to over the weekend news, to kind of overall circumstances. So we have challenges to tariff impacts. We have a reiteration that tariffs are still in place from the administration. And that's creating, I think, a little bit of uncertainty on the part of the market. So we pop over here and let's take a look really quickly at this contract right here, /VX. And the reason I bring this up, this is the /VX. This is the VIX futures. And again, this is going to trade. So the VIX, VIX itself, is the index based on the price of in the money, at the money, out of the money options on the SPX over 30 days. The /VX is the futures contract tracking that VIX as almost as if it were the underlying, just kind of like the relationship between SPX and /ES. the relationship is here between VIX and /VX. VIX /VX is the VIX futures. We've talked about these VIX futures before. And so we're starting to see, if we kind of zoom in over here, we're starting to see that VIX futures contract moving a little bit higher here. Now, the /VX, again, if we kind of go through our contract specifications, tick size is 0.05. So you're not going to see this, you're going to see this move in those increments there. It's that increment right there. It's this significant digit right here. And you're going to see the point value give us that notional. So it is that point value times this that gives us the notional value of the contract. And if we were to pop over here and we were to take a look at our futures drop-down list, we can see that the initial margin on VIX futures /VX about 7,964. Even though this is a fairly small notional value, it's got a relatively high initial margin. And there's a reason for that, because volatility is a product that can spike significantly. We've seen significant spikes in the VIX. That significant spike in the VIX index can create significant spikes in the /VX. And so there is that additional volatility aspect, additionally a little bit larger initial margin into this contract relative to notional value. So something to keep in mind as you put these ideas into practice. Now, what I want to do really quickly here is take a sidestep. I want to pop over here to, again, a third-party provider. Now, we can look at this on the Schwab.com website. I wanted to give you another place that you can find this information. This is CME Group. CME Group, one of the futures exchanges out there, third-party provider of information. So this information is theirs. It does not mean, because we're looking at third-party information, that it is endorsed by or recommended by or anything else by Charles Schwab. So that being said, this is third-party information. But I wanted to kind of get a look at the futures products as they are moving. This is their version of heat map. And again, we've looked at this before. The green or red to the left of each one of those futures blocks shows the movement. Now, this is delayed information by at least 10 minutes, so we're seeing a little bit of a delay, but you can see that crude oil futures on the move, Brent futures, RBOB gasoline futures also moving, but also our gold futures, silver futures, platinum, palladium, and others. We come down to the micro contracts, the ES or the micro ES contract, the micro NQ contract, the micro gold futures, and the micro cryptocurrency futures also moving as well. So I just wanted to give you that sense. So this is at cmegroup.com. You can find this information as far as what's going on with that kind of overall picture. So let's pop back over here to the chart. We know that VIX is rising. We know that the indexes are moving down a little bit. So I'm going to go to my futures group, or my futures grid, and I've got this grid again linked in the webcast description down at the bottom. So you can find this grid down there. I'll even do this, since I'm feeling magnanimous at this point, is I will share this grid with you. Again, remember that anytime we share anything, it is for illustrative and educational purposes only, and not guaranteed as to time or accuracy. So here is /MGC. This is the micro gold contract. And you can see, and one of the reasons why I kind of didn't focus down in this on today is that in the longer term chart, the 1-year daily chart, seeing that push and that little bit of a breakout. Now here in the daily chart, or the intraday chart, this is today in 5 minutes, not really seeing much of a push one direction or the other. It's really kind of gone sideways. So it's really kind of just sitting here, kind of oscillating around this 35.50 kind of support and resistance level, kind of that midpoint here, not really pushing one direction or the other. And in fact, momentum is kind of squeezing a little bit as well. We can kind of see that momentum as indicated by the MACD kind of squeezing back towards that zero range. So until we get perhaps a breakout of that range, kind of staying away from /MGC. But I wanted to take a look at, let's look at /MES, the micro E-mini, S&P 500 E-mini contract, because several of you are saying, well, hey, the markets, Carol, markets are recovering, at least at the moment. So coming off of that bounce off of the 200 period moving average, and we look at the right-hand side here as that short-term movement, starting to see some short-term momentum building here. So let's see if we can put together perhaps a little bit of a short-term bullish trade here. Before we do that, I wanted to go through the specifications of the contract. So tick size is 0.25. So this is going to be our significant digit. Our tick value is $1.25. Point value is $5. So whenever this changes, that's going to be a change of $5 in the value of the contract. Take that times the price, and we get our notional value. And we take a look at /MES, our initial contract. And you can see that even though this is a larger, so the initial margin here, even though our notional value is larger, initial margin less than that VIX futures contract, $2,202, $2,202.20 at the moment is the initial margin for this particular contract. So a little bit lower initial margin on this particular contract. So let's pop over here to our right-hand side. This is our shorter term chart. This is today's 5-minute chart. You can see the bullish momentum going on here, and a little bit of a push to the upside here as that momentum gains. So looking for potentially bullish movement here, looking for possibly a move back towards one of these resistance levels. If we were looking for this to reverse that entire movement, there is the potential that we could see this move up to this 64.71. That seems to be, just from looking at resistance, we could use Fibonacci's, we could use any number of tools here. But here's how I'm going to define this trade. I'm going to use this, what was support right here, as potentially a resistance, as a trigger to get into the trade, giving me some confirmation that this is moving higher. Although we have 1, 2, 3, 4 solid upward moving candles here, we're starting also to see that bleed off a little bit. And then what I'm going to do is, if this goes back below this support level right here, stop the trade out. You can kind of see the characteristic of this trade. So as we put this on, so we're going to look at this as a buy stop entry here at 64.22 with the target up here around 64.71. We'll call it 64.71, and a stop down here at 63.86. So I'm going to right click, and we're going to buy custom with OCO bracket, and we're going to put this order in. So we're going to make this first one the order to enter a buy stop. Stop, wait, don't do anything until the price of this contract gets to 62. I'm going to call it 64.23. 64.23 is about where that resistance level is. And we're going to make that a day order so that if this doesn't fill, then we're okay. We're okay in the standpoint of, if it doesn't fill within today, then we go back, the trade goes away, we go back and we reevaluate. So then my target in this particular case is, we'll call it 64.72, just for easy math. 64.72. And that's going to be our target. I'm going to make that one. No, whoops, I changed the wrong one, didn't I? You notice that I changed the wrong one. So 64.70, 64.73. This is why we read the orders, kids. And our target, 64.71, easy math. 64.71, no. 64.73. Hang on. I got it wrong again, didn't I? 64.23. 23. There we go. Again, read the order. and 64.71. Thank you, guys. Yep. You guys have seen me do this a number of times where I have not read the order and it ended up not being a good thing. So 63.86 is going to be our stop. 63.86 is going to be our stop, and we're going to make that good till cancel. And remember, that's going to be a stop market that is going to get worked as an exchange designated limit order. We could make it a stop limit. I'm going to leave it as a stop market simply for that illustration and that reminder. But also remember that this one, the target order here, is going to trigger as a limit order at 64.71, which says sell this contract at that price or better. So if it goes up and if it continues to go up and we get filled a little bit higher, is that okay? Yeah, absolutely. That's okay. So in this particular case, we could set that stop limit at 64.23. We could set that as a buy stop limit as well in terms of that order. And so we're right there. I don't want to talk through this. I don't want to miss it. So I'm going to click on confirm and send. We're going to read through the order. Buy one contract at 64.23, buy stop to open, and then sell it if it goes to 64.71, or sell it at 63.86. Again, designated, the transaction costs here. Our buying power effect, in fact, is our initial margin into this contract. And I'm going to put it in our futures group. And we're going to go ahead and we're going to click on send and see if I had not been talking and I had actually sent the order, it might have filled. We'll see if this candle ends up getting to that level and filling at this point, but at least at the moment it is making that move to the upside. Maybe backing off a little bit. We'll see if that becomes too much of a resistance. This is the reason, from a technical analysis perspective, that a trader may use something like a buy stop order. And so, because you can see exactly what's happened here in this 5-minute candle, is that 5-minute candle moved with some momentum above that, what was previous resistance, previous support, now potentially acting as resistance, and failed at that point. There's a reason why this was acting as a level of support, because there was selling pressure and there was buying pressure at that point. So the reason for using a buy stop is to confirm, give some kind of confidence that price is moving in the direction that the trader wants it to go. Is it a guarantee that it's going to continue to go to the target? Absolutely not. Is it a guarantee that it's not going to do exactly what it's doing right here, which is give us a little bit of a shooting star candle? No, there's no guarantee that it's going to do that. So it just gives us that confidence potentially to see that move a little bit higher here. Okay. So there's a couple of other trades that I wanted to look at as we have a couple of minutes here. And I want to pop back to, let me redo this. We'll go restore cells. And remember when we looked at that heat map on the CME site, one of the things that was moving was RBOB gasoline. A little bit here. So I think, do we have a mini RBOB? We don't have a mini RBOB. We've traded the RBOB before, but we're not getting that intraday data here. So let's do this. I want to take a look really quickly here at / let's go to the silver futures, because I know that one was moving as well. Let's take a look at our silver futures here. Let's go to the 100 ounce or the 1,000 ounce silver futures contract here. Substantially smaller initial margin. It is a smaller notional value. Silver on the move today. We see that continuation of that move to the upside. Tick size is 0.005. That means our significant digit is this one right here. It's going to move from 0 to 5. And the tick value is $5, which means that the point value, every time this moves from 41 to 42 or 41 to 40, that's going to be a change of $1,000 in this contract price. And we look at the notional value of $41,000. So our initial margin into this contract, $3,300, which is a lot less than the $16,500. We talked a little bit about this last week, I think, in terms of capital efficiency. Yes, the gains are going to be smaller, just point value wise, in terms of the smaller contract. But in terms of utilization of capital, in terms of the amount of capital tied up in initial margin and then in maintenance margin for traders, and again, it's not up to me to decide how much of your portfolio you put in any particular trade or how much initial margin you put in any particular trade. That's your decision with whatever methods you decide you want to use. But considering that these smaller contracts have smaller notional values, they have smaller initial and maintenance margins, that may be more efficient capital utilization in your portfolio, even if the gains may potentially be smaller, just from the amount of trades that could be put on at any particular point. So I'm happy to see this kind of double bottom here. I want to put this idea in place as we get started, kind of rolling into this and find this level of support. Again, remember, levels of support and resistance oftentimes are drawn not with mathematical precision and not with fine lines on the chart, but with big fat magic markers. The way that I like to describe it is not too particular, not too precise, kind of like Jimmy Buffett's cheeseburger in paradise, right? So the move here might be, let's kind of zoom in on this time frame, looking at a move back towards this previous level of resistance. Shorter term trade, and again, taking advantage of potential upward movement. And then looking at taking that trade off. Now, a couple of things we could do. We could stop this out down here, or we could look at stopping this trade somewhere where there's this level of support that was here previously that's going to give us perhaps a little bit better risk to reward potential kind of look and feel on this particular trade. So we're going to build this the same way that we built the other trade. We're going to go right click, buy custom with OCO bracket, and we're going to do this. We're going to put this at 47.30 or 41.37. So I'm going to come down here and buy custom with OCO bracket. 41.37 is going to be my trigger point. I'm going to make that a buy stop in this case. Leave that as good cancel, and it's now moved above that level. So we're starting to see that move happen here. Now, will that continue? I don't know. Target here is going to be 41.65. We're going to make that target here 41.65. We'll make it 41.65 even, and we'll make that good till canceled. And we're going to make our stop down here 41.24. We'll make our stop 41.24. And we'll make that good till canceled as well. And again, we're going to leave that as a stop market order, which will get worked as an exchange designated limit order. We're going to go ahead and we're going to click on confirm and send, read through the order, make sure that this is what we want to do. Buy one contract at 41.37, looking for that upward movement to 41.65. And if it doesn't do that, take it off at 41.24, making sure that we recognize our transaction cost, the initial buying power effect or initial margin into the trade. And we're going to go ahead and put this in our futures group and click send. And since we're above that level, we should get filled. We get filled at 41.45. So looking for that upward movement. So it's doing what we want it to do at this particular point. And starting to see this move to the upside in that short-term perspective. Not a guarantee by any means. But what I'm going to do is, since I've got this target order up here, if it moves up quickly and moves higher than that level, I'm fine with that. If this moves down and it gets, blows through our stop and it blows through that protection point designated limit order from the exchange, I want to know. So I'm going to put an alert in here. So I'm going to right click and I'm going to create an alert at this level. And I'm going to say, look, if price breaks below that level, 41.25, and mark is at or below that level, then let me know. And my note is going to be pay attention to stop on /SIL. And then send me a ring a bell, send me a text. Now, here's one thing to pay attention to. If you put an alert in, and that is your protection, that is your definition of protection, don't rely on the alert to actually let you know. Maybe you miss the alert. Maybe the cellular network is down and you don't get your text. Maybe you dismiss it without reading it. If you're busy, whatever. Don't rely on an alert, just like we're not relying necessarily on that stop. We want to pay attention, right? Attention must be paid. So it's a good reminder in putting this alert on. It's a good kind of belt and suspenders perspective here, but remember that that's not going to be a guarantee that that order is going to fill, number one, and number two, it's not a guarantee that the alert is going to let us know. So, be aware of that. Now it's starting to bleed back below a little bit here. And something to pay attention to. So let's come back over here to our monitor tab and let's see what we've got going on so far. Let's close that group down. Let's come down to our futures group. So here's our /MES, which has not filled yet. Here's our /MCL, which is working for us in this particular case. And it's going in the direction that we want it to go. And here's the one that we're in, which is the /SIL, which is going against us a little bit here, but not terribly or so. So how do you find risk to reward, Thai asks, in terms of this trade? A couple of different ways. One, I'm looking at this visually, right? So I think this is the first way, and I tend to be a fairly visual person. So let's look at this. Here's my potential gain, right? This is the potential gain in the trade. Gain theoretical. Here's my potential risk in the trade. We'll put this in as R theoretical, because there's the possibility that this gets filled lower, right? So how do I find specifically the risk to reward? I look at it first and I say, look, okay, what's the potential here? That looks to be about 2-to-1. And in fact, I could probably do that with my line tool. And a lot of traders will do this. And I think this is a great question. And thank you for asking that. Because if we were to say, look, here's our potential risk in the trade. Let's take that potential risk in the trade, theoretical, right? Because it could be more than that. I can duplicate that and I can put that right up here and I can say, all right, fine. And then I can duplicate it again. So that's 1 times the risk. There's 2 times the risk. So it's a little bit more than 2-to-1. 2-to-1 in terms of that risk to reward. Now, the other way that we could do this, is we could do this. We could figure out what that potential price move is, right? So our entry into this trade, we said was, let's go to the monitor tab really quickly, and let's take a look at our filled orders here. So we filled that order at 41.41, right? So 41.41, 41.41, and our target, if we go to our working orders section here, our target in this case is 41.65, right? That's our target, our limit order target, 41.65. So 41.65, 41.65 minus 41.41 means 36 ticks. right? 36 ticks potential in that move to the upside. Now let's calculate the other side of that, which is if we had 41 minus 41 24, that's 17 ticks. So 17 ticks of potential loss against, what did we say, 35 ticks of potential gain, thereabouts. So that gives us our potential risk to reward in ticks. Then if we take ticks times tick value, that's going to give us our gain or loss potentially on the trade. We could calculate that out, but that's one way to go about doing that. There are calculators out there that will do this. In fact, even the CME group has a calculator on their site in terms of calculating that gain or loss. It's something that kind of comes intuitively as you start to see the trade and you start to put those trades together. And it's also a good way to kind of rationalize what you're seeing here in terms of that movement. I like to see it visually. I also like to do that calculation and see that move and calculate that out longhand like that, because then it kind of centers me in the perspective of the trade. So a little bit more than 2-to-1 gain to potential loss. And again, remember, those are theoretical. Those are not guarantees by any means that we're going to get those. So, and Tammin Honey says, yes, we do have to be approved for futures options. Futures trading, futures options takes separate trading authorization. So, silver making the move that we wanted to move here in this particular case. Again, really quickly, guys, as we're running into the end of the day here, pop over here to Trader Talks webcast, click on subscribe. This is where you can find more information about all of our great webcasts. My thanks to Michael Fairborn for helping out today. My thanks to our great production staff and our reviewers, Nikki and Mindy, and everybody else that's helping out over there. We appreciate you being here. Thanks for joining us today. We will see you later today with a full slate of webcasts all day long. Have a great day, everybody. Take care. Bye-bye.